Good morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I am delighted today to be joined by Leah Bramwell from our Chief Investment Office. Leah is our Head of Tailored Investment Solutions.
So, good morning.
Morning.
Welcome.
Thank
you for having me, Jane. Thank you.
And as ever, because this is your first time on the podcast, the most important question we ask you for the whole of the next 10 minutes is, what is your coffee or hot beverage of choice?
Well, Jane, I'm a hot chocolate girl, actually, rather than a coffee girl. I think I probably wouldn't get through the day on coffee, so I stick to the hot chocolate.
And are you like whipped cream and marshmallows or just
not
neat?
In January, but, December, maybe hot chocolate and marshmallows.
So this week, our podcast, as every week, tries to cut through the noise and help our listeners feel a bit more informed, a bit more confident and more in control of their financial future. So if you like what you're hearing, don't forget to hit follow on Spotify or Apple or other podcast channel of choice, and you will never miss an episode. So normally at this point, I would say grab your coffee and listen in for the next 10 minutes. But this week, we're visiting Japan, a new location for us. So we're going to swap out our regular coffee for a matcha tea today. The reason we are visiting Japan is that their Prime Minister called a snap election last week. And in the space of hours, it seems, bond yields jumped, the yen swung, and carry trade risks hit the headlines. Now, I didn't know what carry trade risks were until just now. So we're going to learn a little bit more about that in this matcha tea break. So first, I thought perhaps I would just quickly set the scene, at least what I know about the Japanese markets. So they're big, they're globally connected. And so what happens there rarely stays there. And hence why it's relevant for us here in the UK and for clients with investment portfolios. Japan has one of the oldest populations in the whole of the world and too few young people, so hence a shrinking workforce, which causes certain issues. It has an economy that has moved from decades of deflation and stagnation towards a more modest recovery. And it is also supported by near zero or negative interest rates. So very ultra loose monetary policy, but still has a very heavy debt burden. I hope I've got that right. Have I got that right?
Exactly right, Jane. Very, very good summary.
Thank you. So what else can you tell us a bit about this political backdrop and also the markets in Japan?
Sure. So politically and economically, Japan has always been viewed as a fairly stable, safe haven for international investors. Whilst we've seen underlying demographic issues for a long time, as you mentioned, it's an ageing population, low birth rate. The government has run very high levels of debt supported by those low interest rates. So it hasn't been viewed as problematic. So low growth, low inflation environment, but not affecting investor appetite for Japanese assets because of that safe haven nature.
Quite benign.
Exactly. Benign, kind of steady eddy. When things kick off on a geopolitical stage, the yen, the Japanese currency, is viewed as a safe place to hide. And Japanese government bonds as well, despite that high debt burden, viewed as a very safe, stable place to be.
Okay, good.
So, I mean, looking last year, as you say, we did see a bit of a recovery. Japanese equity markets were very, very strong last year, in line with many other markets. And that's been driven a little bit by the sort of improving economic picture, inflation picking up, growth picking up a little bit, but also by sort of corporate governance reforms that we've long been hoping to see come through in Japan, starting to impact individual companies and their profitability. So a couple of things going on for Japanese markets.
So that sounds all very positive, very stable. So what went on last week then? What's happened? I'm not even sure I can pronounce the Prime Minister's name, but you might be able to.
Yeah, so we've got a relatively new Prime Minister in Japan, Prime Minister Takaichi.
Well done.
Well, my best effort. And she came in October on a mandate of aggressive fiscal expansion.
Okay.
Now, usually a government with a sort of higher inflation level might not pursue expansionary fiscal policy because it tends to be inflationary.
Right.
But the Japanese people are increasingly unhappy with the economic state of the country. And so there's been a lot of talk about possible fiscal reform that could help drive growth.
So she came in on that mandate.
She came in on that mandate, and has called a snap election for the 8th of February in the hope that she can cement her popularity and her mandate to go ahead with those reforms.
So what's been stopping her then in the last, because if she came in October?
Yeah, so she doesn't have enough of a majority.
Oh, so she's Prime Minister of a coalition government.
So she needs to increase her support in Parliament in order to get those reforms through. So she dissolved Parliament on Friday, having called that snap election. And the investor fear is that if we see a clear majority for her government, that could become a mandate for that aggressive fiscal expansion, which will put pressure on an already significant debt load that Japan covers. Yeah.
So when you say fiscal expansion, what sort of things is she talking about?
So fiscal expansion is increasing government spending.
Yeah.
So you've got your two levers of policy to impact growth. You've got your monetary policy, which the Bank of Japan can use interest rates to stimulate growth by lowering interest rates, or restrict it by increasing interest rates. And you've got fiscal policy, which the government can use by increasing spending will stimulate growth, reducing spending, austerity, the word we're all familiar with, should reduce inflation, should reduce growth. So her big pledge is to suspend, there's an 8% consumption tax in Japan on food.
Okay.
So the policy is to suspend that for 2 years, which would cost the government around 5 trillion yen. So it's a big policy and would be stimulative for growth.
Okay, right. Whew. So based on all of that going on last week, you touched on equity markets being at a record high over recent times. But how did this activity particularly impact, say, the debt markets, the bond markets, and also, I guess, currency with the yen?
Exactly. So, in a week dominated by Davos headlines and Greenland and, US and all of these things.
We're quite pleased on the podcast to be talking about something that isn't Trump, that's something else.
Isn't it funny that we're focusing in on Japan?
Yeah.
And why are we doing that? Because the Japanese bond markets are really, really important for the global economy.
Yeah.
So this move really hit Japan's bond markets hard. We saw a quarter point, a 25 basis point move in Japanese bond yields in a single session, which is really, really significant. That kind of move for Japanese debt, we would usually see over weeks or even months.
Yeah.
So to see that in one day is really
going back
shocking.
to what you were saying at the beginning about how stable the market's been. Yeah.
Exactly. So people expect this to be a very stable, steady Eddie market, and to see that kind of move in one day is really unusual. So, that sort of sent shockwaves around global markets. Why is that important? If Japanese bond yields increase, money will move from other markets, other bonds, into Japanese yields because they can get a better return. Yeah. And so that reduces the demand for other assets. US Treasuries, for example. If demand for those goes down, the price will go down. Yeah. And the yield on those will go up. Yeah. And so your borrowing cost for your US government increases because your yield is higher, demand for those assets is lower, and that's exactly what President Trump does not want. And so we've got a big impact on global markets. And we've had decades where Japanese investors, domestic Japanese investors and overseas investors have invested because they can borrow basically at a lower rate, invest at a higher rate. That's known as the carry trade.
Okay, right. The carry trade. Yes, I saw that in the headlines. So that's good to understand what that is. So maybe just to sum up, why is this of interest, particularly for our clients, for portfolios that the Chief Investment Officer are overseeing on behalf of our clients?
Sure. So our clients have exposure to Japanese assets through both global investment funds, but also Japan-specific funds. But aside from that, it's a bigger picture issue. What happens in Japan doesn't stay in Japan. What happens in Japan is felt all around the world. And it's that unwinding of that yen carry trade, which has potentially very significant implications for US government bonds, UK government bonds, all other government assets around the world, as we see the movement of that capital adjust to what has been a decades-long equilibrium, where we've seen the yen viewed in a certain way, JGBs viewed in a certain way, and if that unwinds, that will have implications on prices of assets all around the world.
Yeah, okay, really interesting. Thank you very much indeed. So I probably should sum up what's in my Canaccord Matcha takeaway teacup this week. So this week was a really good reminder that Japan's policy mix can move bonds, currencies and equity markets globally, and that the Japanese bond and currency markets were extremely volatile on the back of the Japanese Prime Minister dissolving Parliament. So given the size and the reach of the Japanese market, this means we all have to keep a close watching brief, as this could potentially impact global markets and what we're all invested in here. So many thanks. Thanks, Leah. Thank you for your time today. Please do come back and visit us again.
Absolute pleasure. I'd be delighted to.
Thank you. And I hope you enjoyed the podcast this week. And don't forget to hit follow so you never miss an episode. And if you have any thoughts, feedback, comments, please do email us at coffeebreak@canaccord.com. Thank you.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.